Hello everyone, welcome to the Ichimoku charts.com daily analysis for gold for Wednesday, November 21, 2012. Well, a change of trend today in the candle with a lower high and a lower low. Previous day's trading we had an uptrend in place on a spinning top type candle, prior to that a fairly bullish candle, and we saw the buyers lose commitment up around this area of resistance extending up to around the 1739 level. I mentioned previously that that is a very important area of resistance. If we look at the shadows on the top of all of these candles here, it highlights the strong price rejection from around this area, and that area extends all the way up to around the 1745 level. So it's little wonder that following that bullish candle we had this indecisive spinning top type candle, and today a change of trend. Now, even though we've had this change of trend today, we have a small white body candle suggesting that the buyers have made a small amount of net bullish progress, as opposed to the sellers making bearish progress the previous day. So not the type of candle that you'd like to see start a downtrend. But we also see a very large shadow on the bottom of the candle with the buyers closing up towards the high, and that suggests that the sellers have lost commitment throughout the trading day. So even though the trend has changed, the sellers have been strong enough to take out the previous low. They weren't strong enough to maintain the market down below the previous low. They lost commitment, and the buyers actually closed with control of this market, and that does set the market up for a change of trend once again. Now, if we do see that change of trend, however, we do need to remember that there is strong resistance overhead, and any change of trend to the upside will most likely be met with a weak candle with shadows on the top. There is an opportunity for the buyers to build some momentum to trade outside of the cloud here and outside of this zone. So if we do see solid bullish activity, it could mean that we are seeing quite a change in sentiment in the market, but not trying to preempt this market at the moment with what we want to see. We have to read what we actually do see. With this current candle, we also saw the sellers lose commitment down around the Tenkan-sen, and this highlights very well how the Ichimoku indicators connect to support and resistance. And for the previous two trading days, the area at or just under the Tenkan-sen is held as support. I think it's had resistance before acting as support, and very strong price rejection as evidenced by the shadows on the bottom here. Now, in terms of the previous Fibonacci extension, this highlights very well how it works, and the market for the previous two trading days attempted to trade above the 161.8%, and the buyers lost commitment up around that level, and today we've seen that change of trend happen with the change of trend to the downside. Also, with the Fibonacci retracement, the previous two trading days attempted to trade just above the 100% level, were strongly rejected from there, and the change of trend. But looking at the current Fibonacci retracement of the prior uptrend, now that we're trending down, we've seen the market test down to the 38.2% and to the 50%, testing just below the 50%, being strongly rejected from there, and that does suggest that there is a possibility of a change of trend back to the upside. Now, in terms of Ichimoku, obviously the market is neutral in the long-term time frame by trading within the cloud, so no clear direction there. But we do have a bullish market in the medium and fast-term time frames by trading above the Kijun-sen and the Tenkan-sen. The market has been trading above there now for the previous three trading days, and that does suggest that if we see some strong buying coming into this market, and we see the market successfully test above these very strong shadows on these candles in a bullish manner, then the buyers may be able to build some momentum to trade more substantially to the upside. But as I've mentioned, we don't want to preempt the market. So a bullish market in the medium and fast term time frames. We have the the Tenkan-sen and the Kijun-sen holding as support for this market. We do need to watch that tomorrow as well. But if we look across here at the Chikou-span, that's below the corresponding price action, so it's not confirming any of the signals that we're seeing in this market. So we do need to be very careful of the Ichimoku indicators at the moment, with no clear direction in the long-term time frame. And what we really do want to see is a breakout above or below this cloud to give us a clearer direction in a bigger time frame, and then take our trades from that. And as we see here, this very nice trading up above the cloud and trading above the Kijun-sen and Tenkan-sen, and then down below both of the indicators with them holding a support and resistance. This market looks like it could be forming some sort of a head and shoulders pattern. Here's a left shoulder ahead, a right shoulder if it does break up above the neckline. A very strongly sloped neckline that by the time the market breaks out above, it would have virtually retraced half of the prior trend anyway, so not a good reliable signal. Very strong resistance overhead as well, so we do need to be very careful of our interpretation of that if it does happen. Oh, and by the way, that's an inverse head and shoulders pattern, not a head and shoulders pattern. Inverse because it's at the bottom of a downtrend. If we look at the size of this pattern to the width of it relative to the size of the downtrend, it looks a little bit disproportionate as well. Just a little bit too wide for it to be a good pattern. So basically for tomorrow's trading, we do need to watch this zone up above where the market's trading at the moment, initially up to around the 1739, 1740 area, and then up to around the top of this highlighted area around 1745. Strong potential for a change of trend to the upside, but really very strong support down below where the market's trading and strong resistance overhead.